Hello, I'm Peter Towers, Managing Director and founder of ESS BIZTOOLS. Welcome to this overview of the ESS BIZTOOLS Tradies Charge Out Rate Calculator. I'm now going to take you to our website where we have a completed example of the Tradies Charge Out Rate Calculator, which we believe, and in fact we know from experience from many of our subscribers, that this is a very popular product with both accountancy firms and also SME business operators. On our site, you have the ESS BIZTOOLS material. There's a set of instructions which you can read at a suitable time. And then we're going to move into the calculation of labour on costs. There are three main categories: normal full-time employees, permanent full-time employees, part-time employees, and casual employees. In each, there is 6 of these classifications: A1, A2, A3, and then continuing on, A4, A5, A6. And that same process is repeated in the part-time employees and the casual employees. Within each of those segments, A1, A2, etc., there are 6 lines. So the idea is that you insert the classification that everything to do with the leave entitlements is the same. In this case, we've only got one, the manager, because there's some variations for this particular person. For argument's sake, superannuation is higher than for normal other people, and the other rates, and especially training, there's 5 days training, so there's slightly different allocations. The system then calculates what the net working days per annum are, and then calculates the on-costs on an annualised salary, which in that case are 22.57%. You then indicate that you've got foremen and office managers. So at this stage, there's no details of their salaries been inserted. All that's been inserted is the labour on costs, which is a very high cost, as you can see. If we just move across the chart here, 22.57, 21.91, 20.41%. And I find that a lot of people forget this when they set out to do their own charge out rate calculations. Similar calculations are available for the second lot of categories, the part-time people, permanent part-time. So for labourers and office staff, we have their calculations. And you'll note that in each case, we're including long service leave and we're including superannuation, obviously. We then move into the labour budget, where the information is transferred. So the manager was in A1, first spot on that list, so it's A1.1, and you have to insert the information into the yellow columns. So there's one manager and the salary is $145,000. The system has transferred the rest of the information across. What's the total? So if we look at a foreman, there are 2 foremen, their salary is $120,000. So the system's obviously calculated the $240,000. The system transfers across from the labour on costs, the on cost percentages, and the labour on cost is calculated, and it's added then into the costs for an individual person, and then it totals what it is for that category. In this case, foreman, that's that figure. We then insert the individual hours being paid for in the year. These are full-time people, so that's their details. And the leave allowances that have been built in for these people are then shown. And these are calculated back in the labour on costs, where the calculations have been made on on these issues and transferred it across. We do exactly the same for the permanent part-time employees. Oh, I did omit one thing, my apologies. We need to insert the productivity percentage that's expected. So we'll go back, and for the manager, we said 30%, for the foreman, 50%, nothing for the office manager, 85% for the tradesman, 45% for the trades assistants, and so on. Obviously, you can vary those. And one of the suggestions we make is that these actual productivity hours achieved on a monthly basis should be monitored and compared back to these targets, so that if there is any change, for argument's sake, in particular, the tradesman, if that dropped to only 70%, there would be a real need to redo the calculations and try and pick up a higher charge out rate later in the year. The weeks and months that have already gone, it's probably too late. And it's probably too late for any quotes that have been given. So it's very important to monitor this very closely. And what we're trying to do here is to achieve the profit that the business has set. And I'm going to show you how all that works in a moment. So we've got those calculations, and we've determined the total amount for labour is $1.9 million. The system's calculated. The overall productivity works out at 44.54%. And we're then looking at the profitability. We've made provision that you can insert what your client believes the business is worth, $450,000. What targeted rate of return do they want? They nominated 20%. So obviously we're targeting a profit of $90,000. If you don't want to fill in the investment or the rate of return, you just want to fill in an amount of profit, you can do so. And that figure is going to be picked up in the later calculations. We then turn to the budgeted overhead expenses. We haven't recorded the budgeted overhead expenses because they vary so much from business to business, but I suggest that you fill that in so that your client's got a permanent record of how that's been determined, and the system will total it. But we've slotted in a figure of $450,000 for the overhead expenses. The next one we want to look at is the budgeted materials. These are the external purchases that your client is making for all sorts of things to do with the project. What markup are they going to apply to them? Now, in this case, we've said they're going to purchase $1 million worth of products for on sale to their clients. We're going to mark them up by 10%. So there's a projected profit there of $100,000. But we then pose the question, what's going to happen with that $100,000? Is it going to be a retainable profit that's stickable in the business, or is it going to be used to subsidise or partly subsidise the labour charge out calculations? Now, we've shown it all being utilised to subsidise labour here in the labour charge out rates, so it's incorporated in there, but we could have changed that and made that 50-50 or made it naught, and the profit then would have been stickable. That's up for you to have a discussion with your client to determine what they would like to do. We also have a write up or write down figure, and we've elected a write downs. The client said 5%. I don't like write downs, but in some instances, people like having them in their budgets. So the system's then calculated what is the amount of money that's got to be raised from the employee charge out rates. So the total labour, if you remember, was 1916169. The return on investment is $90,000. That's going to have to come from the labour rates. The overhead expenses are $450,000. We've got a $100,000 subsidy coming from the product markups, so it's brought it back to $2.3 million. But we've got an allowance for write-downs, and we are trying to achieve the overall targeted profit of $90,000. So the labour amount to be recovered from the charge out of time is $2.451 million. We then move into some calculations whereby the system calculates the base cost per chargeable hour for each of the categories. And again, we are consistent. We are using those same reference numbers, and obviously there's blanks for some of them because we didn't use them. So the figures are transferred across, including the hours worked, calculates a base cost per hour based on the labour cost. That's multiplied by the number of hours, and this is a mathematical calculation to determine the base cost chargeable hours. And it flows through to the system. It's only putting figures across when people are being charged out. So the total figures there is really just part of the calculations. We then go to the business overhead cost. The total labour to be recovered in charge out rates is 2.51 million. The base cost chargeable hours, that the calculation we just determined, worked out at $887,000. So the total business overhead factor is 2.763. So we multiply that by the base cost chargeable hours, that gives us the labour that's got to be recovered. The system will then go through and it does all this automatically, and again puts those base cost per hour figures in against the various categories from that started off in the labour on cost calculation. It puts in the trade overhead factor figure and multiplies out to determine a charge out rate per hour. Now we've then rounded it to the closest dollar. So at under 50 cents, we've taken it back to the next dollar. Above 50 cents, we've taken it up. And that does cause some fluctuation. About $5,900, $6,000 is the fluctuation, mainly attributable to the tradesmen, where we've taken the charge out rate up. Calculated at $151.51. We're charging at $152, and that's basically the variation that you'll see in a moment. So we've got those factors, and we can then look at the proof. Now the proof is putting it all back together for you. You've got the manager. The hourly charge out rate's going to be $248 in the labour budget. He was going to be chargeable for 490 hours. So we're projecting that the manager will produce income of $121,000. And then we have the foreman and then the tradies who are going to produce $1,696,000. Clerical staff produces nothing, trades assistants, and so on. So if we go to the bottom of this row of figures, it's going to give us a total income of $2,457,933, which was the targeted result that we were looking for. Now the system then produces the proof of the budgeted profitability. Remember, we had materials, they cost $1 million. We marked them up by 10%. So there's a sale price of $1.1 million. The labour figure that we've just established from our charge out rates that we've established is going to generate 2.47 million. And we've got an allowance for write-offs, which has got to be deducted, of course, so 95,000. So we've got total sales of 3,462,000. We've got to then look at the cost of sales. The material was $1 million, and the labour and labour on costs was 1.916 million. So we've ended up with a gross profit of $545,000. It is a gross profit percentage of 16%. We haven't really based this on any benchmark comparison, so don't go using that figure as it just happens to be the gross profit percentage calculation. And we've then got overhead expenses of $450,000. So based on that, we're saying the forecast net profit would be $95,956. The targeted rate of return was $90,000. I mentioned to you that there was a variance of $5,966. We have checked that, and it is in the extra amounts that have come about through adjusting the charge out rates either up or down, and the big variation was in the tradies. So that's where the difference is, where if we use those charge out rates and the productivity figures are achieved, the overall profit, in fact, would be $95,956. That's the result that you can sit down and then discuss with your client. You can fine tune it if you wanted to. Client might say, oh, 85% productivity for the tradies might be a little bit high. Let's chop it back to 82 or 80%. You can do that, showing what the charge out rate will be. You can adjust the profitability figure, of course. He might say, oh, how about we go for a 25% return on the investment of 450,000. You can use anything you like. My suggestion, of course, is you then talk to your clients about preparing monthly financial accounts so that you can compare this. You can see what the individual productivity figures have been so that you can compare it and raise discussions if the targets are not being achieved. Suggest to your client that the fees be increased. We have one subscriber who, when he first came to us, told us he had about 20 tradies and he'd heard that we had this calculator. He tells me now he's got 120. He has charged all those tradies between $8,000 and $10,000 more than what they were paying for their tax returns. So the tax returns were $2,000 or $3,000. They're paying $8,000 to $10,000 more because they're receiving this ongoing monthly set of financial accounts, a monthly meeting, a review of the situation, and then potentially adjusting their charge out rates. So he's created a nice niche of tradies, generating well over $1 million a year from this service. He tells me he's done no marketing or advertising. It's basically been by word of mouth. Tradies talking when they're having drinks on a Friday afternoon, I dare say. There is one other calculation in this system. It just is the long service leave. So you click on, as you're entering the employee back in the labour on cost, what state that they're employed in. And in most of your clients, that will be the same state for everyone. Some of them, you might have them going across state boundaries, of course, because the long service leaves provisions are different in a couple of the states, primarily the Northern Territory and South Australia. Most of the others are the same these days. That is an improvement because some years ago they were all different, but it's a lot better to do that. So that's the overview of the charge out rate calculator. I hope it's something that you're happy that you can use. What I want to go to now is the paper which we've prepared, Tradies Industry Setting Charge Out Rates. We've listed some of the trades there. There's probably another 100, 150 different types of tradies. You can use this with any sort of tradie. And in fact, we use basically the same system for professional service firms, but we've badged that as professional service firm charge out rate calculator. So this paper is part of the package, and it goes through and sets out some discussions relative to the charging of rates. But before that, looking at the whole basis of running a business as a tradie. And this paper has been prepared so you can distribute this to a client. You badge it with your name and you send it to your client. I'm not going to go through this at this stage. This is available for you, and you can read it and decide whether you're going to send it to your clients. So hopefully this type of exercise will give your clients some ideas of how they could differentiate their business. We talk about the material markup, and the same thing applies for subcontractors. If your clients utilising subcontractors and they wish to mark them up, the team member productivity I've mentioned before is very important to monitor, and setting of a realistic target of profits very important, and then monitoring what can happen. And then we explain the Tradies charge out rate calculator that I just summarised for you. So this is in a bit more detail. So you can read this or ask your clients to read this, and they'll have a better understanding of how you're doing these calculations, or you can just say to them, well, you're worrying about all this, and this is just the guidelines which you could share with your team so that they've got a working knowledge of how this charge out rate calculator has been prepared. I hope all this is going to help you in your service to your clients. There are thousands of tradies in Australia, and according to the Australian Small Business and Family Business Ombudsman, there are a lot of troubles with small businesses in Australia. Some of their reports are quite disturbing when you read them, what the Ombudsman produces. So I think we have to work harder in helping our SME clients to improve their overall business performance. And this is one way you can do that. Because if you were working as the full-time accountant for a firm that had a team of tradies working for them, this is the sort of calculation you would be doing for them. So all we're trying to do is to give you the tools and some ideas about how you can present this same material to your clients and help them to get their profit target achieved after the end of the year. And perhaps you also may end up with 120 or even more tradie clients paying you 8 to 10, or in total fees, probably $10,000 to $12,000, including the tax return, which would be a good little niche. And then you could look at doing some specialisation with tradies, because they've got their own issues. So go on to some of their industry meetings and talk to them about financial, commercial, management accounting issues that affect everyone in business. And this is the way that you can really promote that you are more than a tax accountant. You are able to give them business advice that applies to the real world business situation. If you've got any questions on any aspect of this product, please send us an email, peter@essbiztools.com.au. Have a great day. And I hope that I'll be able to talk to you in more detail at some time not too far in the future. Goodbye. Have a great day.